Good morning. It's the Ambassador on Thursday, September 17th. Looking at emerging markets overnight, we continued a move stronger to year-to-date highs, essentially off the March low in emerging markets yesterday afternoon. But Asia stronger, taking that U.S. Final close. China up 2%, India up 20 basis points, South Korea up 70 basis points, and really is the kind of the sleeping story, certainly month to date. If you look at South Korea, that's arguably been the most impressive part of the Asian story. Looking into Central Europe, you've got Czech, Poland, and Hungary up a hair. Hungary outperforming. Russia down with oil. But again, Russia's had a fantastic run, and is essentially broken through the June high resistance late last week, held that this week, trading higher on a lot of the big blue chips, where we're starting to see the Western money coming in. Locals had been ahead of this trade. Looking at Turkey, a market that's really underperformed in September when emerging markets have gone to all-time highs year to date. That is down about 30 bips. Always watching the IMF as your kind of 1 to 2 brain cell trade for Turkey. Looking at South Africa, strong outperformance today, currency weakness, very bullish for a number of the exporters and the mineral companies, and a question about the policy on the rand. Its strength has been a contentious issue for a number of the domestic commodity producers. So a mixed to mostly strong day in emerging markets as we enter into the U.S. time, and expecting Brazil also to track the dollar and to track commodities, which have been part of the big move up. The dollar this morning on the Dixie is trading up 7 cents, mostly in line, mostly near the bottom of the range, and at this point, all expectations for the dollar to hold this downward channel and continue to test lower. If that's the case, you're going to see 60% of the MSCI emerging index, which is commodity-based, continue to have a bid to it. And in that backdrop, with U.S. data out this morning, housing starts in line, initial jobless claims slightly better than expected, putting effectively the 1 month trend around 540 jobs. That's actually positive enough, and add that to industrial production and manufacturing numbers and retail sales and CAPU, and you've got a demand forecast for the developed world, which could take emerging higher. That's it from here. Looking for a smooth day of trading. Thanks.